Welcome back, Alpha Hunters. Hope everybody had a great week because markets are closed for the week of July the 7th, the first closing Friday for July. So we had kind of a short week this week. Monday was only a half a day trading, Tuesday was a holiday, but we still had some important moves go on the market. And I'm going to tell you the most important thing that went on this week in the markets. Well, let's go ahead and start by looking at what happened this week on price action. Nice little gap down on Monday. Not too much happened on Monday and really even Wednesday all that much. Monday, nice little gap down, just kind of traded very nice steady uptrend throughout the day. Half day of trading, not too much going on there. Tuesday, the markets were closed. Wednesday, nice little gap down, got bought up immediately. And it was basically within the first hour, and then that was basically it. We just kind of went sideways throughout the rest of the day. So not too much was going on then on Wednesday. Thursday was probably the bigger move of the day, and it was really just this huge gap down that we had. And this was about a 0.85% of a gap down on the SPY. So yeah, that was a monster gap there. And if we actually take it back to even last week, you can see we had a very solid island reversal because last week we had a huge gap up on Thursday to Friday, and then we just had a couple of trading days early this week, Monday and Wednesday, and then a huge gap down. So we just had a huge island reversal there, but luckily enough, we did wind up filling it on Friday. But Thursday, we did sell down pretty good for the first roughly hour and a half or so. And then basically we just traded higher than the rest of the day, kind of got back above the open. So we had a nice little lower wick on the day. Friday, we opened a little bit lower and then got bought up immediately. First 30 minutes was very strong. Then we pulled back for about 20. And then we went higher into the middle part of the day. Very strong move, by the way, in the middle part of the day. But we filled that gap down that we did have from Wednesday to Thursday, and also that island reversal we just looked at. So the SPY kind of topped out here and then started a pretty slow rollover until that last hour, and it really accelerated down to the bearish side and actually wound up closing below the open on the day. Now, what was kind of significant here on the Friday session is it ranged pretty wildly for basically the week's range. And from where it opened to where it ran up to the middle part of the day to where it kind of came back to, it was a big deal, especially when you're looking at the weekly chart. So we can take a look at some of that, and I'll kind of show you why. And take a look here at sector rotation for the week, and we can see really healthcare was the big laggard of the week, and you'll see that on the DIA. We can check that out a little bit later. DIA has a larger weighting into the healthcare area. And then we also had a little bit of an underperformance on materials and tech. You can see this purple line here. This is the XLE, and it was actually pretty much underweighting going into Friday, and then Friday it had a nice rebound, the XLE. So a lot of energy stocks bounced pretty good on Friday. Some sectors are kind of in line with the market for the week was staples and industrials. Some financials were outperforming for the week, as well as discretionaries, utilities, communications, and real estate. Fed Reserve balance sheet data that came out Thursday after the bell came down again. So that's 4 weeks in a row now that the Fed balance sheet has come down. And it came down by about 1.8%. The VIX was kind of a weird one this week, as it definitely did move a little bit higher, Monday, Wednesday, and even Thursday, especially with that gap down. But real quick, take a look at the SPY. SPY move on Thursday. I mean, we gapped down pretty good, but we didn't get close to taking out that low that we put in back on June the 26th. But if you look at that VIX move, I mean, the VIX spiked heavily, very heavily, all the way up to 17. So yeah, that was kind of an interesting move there on the VIX on Thursday. So we'll have to see what happens with the VIX kind of going forward. The DXY, the dollar index, was looking pretty good for the first part of the week, but Friday came and it just got crushed. Now the main level probably needs to break is this one that was set in back in mid-June. And if it gets through there, I mean, obviously it's going to come down to 101, but those are probably the next two support levels it's obviously going to be hitting. So we did have a pretty bearish day back over here on June the 15th, but it didn't go much lower. We'll have to see what happens going forward. And looking at the 10-year yield, nice move this week on yields. Very strong, aggressive push higher. And this is one area where the stock market was kind of feeling the hurt, is yields kept climbing higher this week. So yeah, starting to barely breach above this high that I put in back in March. And then obviously we'll have a big one back in October that, will be kind of tough to kind of get through there on yields. So we'll see what happens. The 10 and 2 inversion finally did take out that March bottom. And ever since then, it has been climbing. It even spiked pretty good on Friday. But this thing seems like it wants to just start climbing now. But if it keeps climbing too rapidly, that is not good for the stock market. Take a look here at the GLD, the Gold Trust, and we saw it pull back a little bit throughout the week, and then Friday, nice little gap up as the dollar was getting wrecked. Not really too much to say here. It's kind of in a sideways consolidation right now. It kind of looks like, and I do think it'll probably continue to pull back, but if the dollar keeps dropping, it's going to make it kind of tough. HYG, man, wow, what a move the HYG had on Friday. It was a huge wick, nice gap down on Thursday, right down to kind of this low that would put in back in late May. But nice upper wick today, kind of filling that gap. And what was really kind of interesting about the HYG is kind of what the other bonds did. We'll take a look here at the LQD, but yeah, nice upper wick there after a pretty bearish move through the beginning part of the week. So this is not set up very well for the bullish side. But like I said, looking at the LQD, you can see a huge gap down on Thursday, but not nearly the huge upper wick, the huge buying that the HYG saw in the beginning part of the day. So yeah, it was kind of interesting when we were looking at that on the live stream on Friday, that the HYG was just way higher than the LQD or even the TLT. And speaking of the TLT, you can kind of see where it got to this week. It came all the way back to that March low, and it's also kind of where that December low was as well. So yeah, it's not exactly the best spot to try to go bearish right here on the TLT, but you need to let it break through here and then maybe take it on a retest back to the bearish direction. Or if it wants to consolidate sideways here for the next couple days or week or two, then maybe take it bearish. All right, taking a look here at the week over week options change. And really there was only a couple things that really kind of stand out here. One, there was a lot of call buying for this next Friday, July the 14th. Huge amount of call buying there. A lot higher than what we had seen definitely going out through all the other expirations. Another thing you notice is that December 15th expiration saw quite a bit of put selling. There was put selling. We don't typically see that. It does happen, but it doesn't happen all the time. And then we had a lot of put buying in September, August 18th, and 11th. This is the sentiment survey that comes out every Thursday morning. And what was really interesting is we actually saw more bullishness come out this Thursday. So that is the new high, 1 year high for bullish sentiment. Now, the bearish side dropped off. It didn't get down to as low as it was 3 weeks ago, but it did drop a little bit, especially compared to the 2 previous weeks. Looking at the Fed Watch tool to see what rate odds change week over week, and we can see, well, we're getting a little bit more sure that we're going to get a rate hike here in about 3 weeks. All right, just go ahead and count on getting another quarter-point rate hike at the July meeting. September rate odds looks like a little bit higher, possibly even another quarter-point rate increase in September. So we'll have to see what happens there, but not too much of a change there in September. November also wasn't too much of a change, a little bit of a higher level of a hold at the elevated level and a little bit more of another rate increase there in November. And then December, a little bit more of a hold at the elevated level with some pretty good amount of odds for another rate increase or maybe even a hold 50 basis points above where we are currently. All right, so let's run through these markets real quick. The RSP, the equal weight SP 500, huge upper wick. And you're going to see that a lot on these markets on Friday. Huge upper wick there on the RSP. And that's coming after a pretty good gap down. You can see that we didn't have a pretty good island reversal there set up on that Thursday gap down. But the market came out Friday, the first half of the day, and was pretty bullish across the board. So I'm going to probably repeat this through a lot of these markets, but today, the Thursday gap down and the Friday upper wick does not exactly scream a massive bullishness. I would be a little bit more cautious here, especially if the markets start breaking below that Thursday low. The DIA, the Dow Jones, huge upper wick also on Friday. Nice little gap down, nice little lower wick. And like I just mentioned, watch out if these markets get below that Thursday low. Well, the DIA actually did that on Friday. Now, the thing you need to understand about the DIA and the Dow Jones is they actually more heavily weighted with healthcare stocks, as UNH actually has the highest weighting in the Dow Jones. So yeah, we might see some bearishness kind of come in going forward because that doesn't set up all that well. And you can see that it didn't even come close to filling its island reversal. So the Dow Jones definitely has a huge island reversal here. Last week I was kind of mentioning that the IWM made a pretty good run last week, but this is not exactly the area you'd want to be looking to be bullish, but I couldn't justify being bearish here after how much it moved last week. So we did see it pull back this week. Nice gap down on Thursday. Nice little lower wick too. I didn't really think that it would fill this gap, but it came out and filled it on Friday. I mean, the IWM's just kind of been all over the place here recently. So yeah, filling it on Friday. I have no idea what this thing's going to do because it's kind of just in no man's land right now. So I would just be hands off. Taking a look at the Qs. This is the most important thing that happened this week. Well, that's kind of in combination with the SPY. We'll look at that here in just a second. But we did push a little bit higher in the beginning part of the week on Monday, Wednesday, a little bit higher, but we did not take out that high from June 16th. And we'll see what happens on the market. Because if we start to trade back lower and we come down and take out this low that we put in back on June 26th, we now have lower highs and lower lows. That was what I was talking about last week. I said, watch the Qs this week. They did not take out that high. So it's going to be very important. Nice little upper wick that came in today as well. Taking a look on the intraday here on the Qs. And you can see how much it just kind of rapidly sold off there for the last 2.5 hours of the day. And taking a look here at the SPY, and mentioning last week that the Friday, June 30th, it actually did get above that mid-June high just ever so barely, but it did do it. And the Qs obviously haven't, but we pulled back a little bit every day, and that nice little gap down on Thursday. And then Friday, the buy up kind of filled this island reversal. Kind of a bummer in my opinion, honestly. I just wanted to see the island reversal stay there for a while. But, it is what it is. But that's a hugely bearish upper wick. I mean, I couldn't believe that we came all the way back down the last 2.5 hours. When I was kind of talking about this on the live stream, I was like, yeah, watch out if we get back below 440 by the close. Well, we did that. We got back below 439. But then I was also saying, watch out if we kind of ended the week up at like 442 or higher, or kind of like the upper ends of today. So yeah, looking here at the weekly, and we got over 442. So yeah, if I just put the cursor here on a 442 level or so, you can see how much of a lower wick we would have had if like we would have ended at 442 or higher. So yeah, it is definitely one of those that if we would have ended towards the high of today, it would have set up with a hugely bullish candle last week with a nice little inside lower wick candle setup going into next week, which typically those are extremely bullish, but it doesn't set up that well now that we saw the sell-off into the end of the day on Friday. And really, I don't expect too much kind of going forward. And really, my game plan is I would expect one of two scenarios next week. Monday, we probably come out, sell down, and then we go sideways middle part of the week, and then we kind of drop again. Or maybe we go sideways the beginning part of the week, maybe try to rally a little bit, and then, the second half of the week, end of the week, next week, we kind of just roll down a little bit. So that'd be what I'd be looking for. But have a great weekend. Alrighty, take care, Alpha Hunters.